Welcome to the coffee shop, everybody. This is your host and barista, Mr. Coffee Shop Crypto, and I gotta say, you guys are awesome, just awesome. Okay, I just released this indicator 2 days ago. Okay, it's gonna be 3 days, and like a few hours from now, it'll be 3 days that it's released. It's already got 7,000 people looking at this thing. Great job, community. Love it. So it is the high time frame MACD. Okay. The MACD has been a very widely known and widely used indicator for probably what, like 3, 4, 5 decades or longer than that. Like it's been, I think since the 30s or longer. I'm not sure. So, so a long time. So if you guys want to get your hands on the zero lag multi-time frame MACD, here's what you do. I'm just going to close this window because you don't need it up anymore. Just go to your indicators tab and type in zero lag multi-time frame MACD. Right, that's what you're going to put in, and you'll see it in the community. It's mine. It's not this one. This is some other one, whatever. It's going to be mine with Coffee Shop Crypto. Right now, why is this one so good? Okay, so some time ago, I told you guys that I will be creating a bunch of indicators that will allow you to get high time frame values. Where's my hand? High time frame values on low time frame charts with zero wait time. Like you're going to see them instantly. And I've cracked the code on the ability to do that. Let me show you the problem with current indicators that you can get from TradingView or from other other publishers that give you high time frame values, right? So the settings for my MACD and the settings for this MACD, which is the regular MACD that comes from community, the settings are the same, okay? It's just that you can see high time frame on mine. So anyway, you can see these little steps right here. That's because the high time frame session has not closed. So the session opened here, right? The high time frame session, and it closed here, right? So during this entire time, you have no idea what's actually happening with the MACD. Is it going up? Is it going down? Is the distance shrinking or expanding between it and the signal line? You have no idea what's happening. So you would have to wait for all these candles to close, right? Now, let's say you went to a further time frame. This is looking at the 1 hour. Let's say you wanted to look at the 3 hour, right? And now you have to wait even longer. The session opens here and the session closes here. And look what happens with price action between these two times. Let me just kind of do this here. And can I get there? No, I can't get there. There we go. So you end up with, I'm just going to draw around some candles. Okay. So there we go. So it's saying that it's flat. Well, it's not really flat. It's actually a downtrend. Okay. So you could actually trade a pullback into your moving average, which is pretty cool. It's saying that there's no values changing here, but you obviously see the values are changing. So boo to the regular one, and we're going to just take this off. I'm going to show you, if you guys can't figure out how to trade this without instructions, like I don't know, like, I don't know what to tell you. So it's very simple. I'm going to turn off everything here. Okay. I'm going to turn off the MACD and the signal, right? And I'll turn off the low time frame histogram. Okay. I don't think I put a 0 level here. No, I did not. So I'm just going to put a line here at 0. Okay, there. That's at 0. So basically, there we go. So basically, you have two kinds of uptrends and two kinds of downtrends, right? So you need to know what your price action is doing. If your price action is in a downtrend, then you want your high time frame, right? You want your high time frame to match that, be in a downtrend, and then your low time frame has to be moving into a downtrend as well. However, let's say price was moving in a downtrend, and now the high time frame is pulling back this way. What you have taking place is I'll just draw it this way. Your high time frame price action was moving down, and now it's simply doing a pullback. It's not an uptrend because this move up is taking place below 0. That's what's happening. And in this case, your main trend started up here, right? Started up here, and it was a downtrend. Now you are in a pullback from your downtrend. You got this going on, right? That's what's happening. So if you were using like wave analysis, you go like this, you're down, and you're doing this, and you're expecting this to take place. What you're looking at right now is this leg. That's what you're looking at right here. Because this move is still moving north, it's moving up below 0. Then it starts coming up above 0. So I'll show you how to interpret this in just a second. Let's wipe all this stuff out, okay? Now you have an uptrend taking place, right? You have an uptrend taking place. You can see you're above your moving averages. Your moving averages are all right side up. Price action is above the moving averages. You have an uptrend taking place. Great. So this is what you want to be looking at for a strong trend up. But then while you're still above your moving averages, right, you start getting this push down. What you have is the pullback. That's it. And it's either pulling back to one moving average or it's pulling back to the other moving average. That's all. That's all it's really doing, right? So now you can understand, am I trading long or am I trading short? But you also understand, are you trading a pullback from a long or are you trading a pullback from a short, right? So just kind of, play that part of the video over again and you'll, be able to catch that very easily. So here we go. Now, let's put the other MACD back on here. We're going to show the MACD and the signal because they're kind of important. And let's put the low time frame histogram. Now, actually, let me turn these off for a second. What you also get on here is you also get the high time frame signal, okay? And you also get the high time frame histogram, okay? Now, this is another way to understand what's happening with your high time frame, okay? Are you going long or are you going short, right? So if you have a downtrend taking place, right, and you see that your high time frame histogram is falling or the low time frame histogram is falling, but then the histogram starts rising, you need to understand this is not a rising histogram. This is a rising histogram. What you want in your histogram is expansion, okay? You want divergent. Wait, divergent? You want divergence. You want you want these two lines to be getting wider and moving away from each other. But if they are moving towards each other, these two lines, then the histogram gets smaller. So your downtrend is getting smaller. Your uptrend is good because this is expanding. And then over here, you still have an uptrend, right? But they're getting closer at this point, right? So the histogram means something. It means that you had an uptrend, and at this point, you were losing the uptrend, okay? And we'll go back here. And over here, you had a downtrend. This is confirming that you have a downtrend because this is getting wider. But then at this point in time, right, you are losing the downtrend. So let's just take a look at what's happening to price action at this point. You end up striking a support level. You can call this a support level. You can mark it later on. You could mark it if you want to. And then you could say, hey, I need to get back above that level and I'll be in long trades again. So you see how price gets stuck. There's a gap in price. It gets stuck and it finally breaks through. But what happens here, right? At this point, price breaks above and you're losing the uptrend. You want to wait for a little pullback, right? If you are in an uptrend, wait for your histogram from a downtrend to start getting smaller. That means the downtrend is being lost. You can use that as an uptrend beginning and then a strong uptrend continuation, okay? So you get the uptrend beginning, right? And then you get the uptrend continuation. So that's how you can observe those things. Okay, let's get all this stuff off the chart. There we go. Now, so real simple way to use this. This is how I like using this. You don't need everything turned on the chart, right? So I'm using the MACD and the signal lines, right? I'm using the low time frame histogram, and I'm gonna turn off the high time frame histogram. I also don't need the signal line for the high time frame. This is directional color, show the MACD. I want to see that. And the signal, I don't want to see that. Okay, so I have both MACDs, the low time frame histogram, and the low time frame signal. That's what I have. Both MACDs, the low time frame histogram, and the low time frame signal. Now, why do I want just that? Again, this is just my method of using it, okay? So what you're going to be looking for is this, right? Whatever the high time frame is doing, you want to wait for low time frame to match that. So if your high time frame MACD line, I see the purple one here, if it's rising, okay, and it's going to be a light color when it's rising, you want your low time frame MACD line to be rising, not falling. You want it to be rising, okay? Now, it's not about the crossover that takes place. You don't care about the crossover because a rising MACD line actually starts when the histogram for the right downtrend starts shrinking. this is where the MACD line starts to try and rise. So you look for this shrinking color of the histogram for the low time frame. And if your MACD rises at that point, then that means you have a uptrend push over here. Well, we still have a downtrend on the high time frame. We have an uptrend on the high time frame here, right? So you have an uptrend on your high time frame, and you have a downtrend on your MACD, which means these two are getting closer. You want them to start going the other way. You want them to start going, want them to get close to each other, right? So if you have an uptrend, you want the downtrend of your current time frame to start getting smaller. You want the shrink to take place, right? And that happens right here, okay? So then you start looking for taking longs at that point. Now, obviously, this is why you use your moving averages on your chart, okay? Use your moving averages. You see, you're below all your moving averages. You don't want to do this yet. So, but this is telling you before this gap took place. Before this gap took place, everything here is telling you high time frame is rising, okay? High time frame is rising. You should be looking to take a long trade. So it would have been good to see this exhaustion take place, right? And then you would just trade it back to your moving average. Now, let's just, so this is where not the internet, but the market just went wild at this point, okay? It got really crazy. So this is like a non-tradable area. It's kind of crazy. So you have this downtrend taking place. I just want to get you into this uptrend part so you can see the confirmations for like entering it and exiting it, okay? Now, it's nice when the uptrend is taking place. This is a rise into resistance, okay, for the high time frame. It's rising to the 0 level. So you're rising into resistance. Then it breaks through it. You're rising away from support. That's what's happening here. Now, you can't take this long trade yet because the MACD on your current time frame is still falling. Wait for it to just once start moving long again. It's not about the crossover. It actually started rising just before that, depending on your settings, okay? So somewhere right here, you should be looking for a break of your moving averages, a break of a previous, resistance level, key level, or whatever the case may be. Your high time frame says it is rising. Wait for your current time frame to start rising too. And it's right here, okay, right at that level. And then obviously it just kind of gets you up, bounces you a little bit. High time frame is falling, then it starts rising, and then it starts rising nicely. Wait for it to start rising on your current time frame, and then you'll be able to get these nice long moves. So there's a couple of long trades and a couple of short trades, short entries, long entries. You can rise into resistance, or you can rise away from support, right? Or you can be falling, right, into support, or falling away from resistance. Like this would be resistance, and you can see what happens on your chart, okay? Let's get rid of this here. So you were falling, price action was falling, and the current time frame was matching it, right? So you're falling into support. They cross each other right there. See that? You fall right into this mess. Both the MACD, high time frame, and low time frame, they really smash into each other at this point. Now everything is still falling. You got a lower high, it falls, lower high, it falls. The entire time this is falling, okay? What you did is you fell into support and then away from what is now resistance. You fell into support, right? And then away from resistance. Then you started rising into resistance, right? Started rising into resistance, but you didn't break through, okay? That's where that craziness started taking place. So the bottom line is very simple, okay? I wanted to go into a little bit of a longer description for you, and I'll tell you the settings in just a second, okay? So I'm using a 5-minute chart, by the way. You don't have to use a 5-minute. I just happen to be using it. So basically, whatever the high time frame is doing, I said it before, whatever the high time frame is doing, as long as it's matching what your price action is doing, my price action is above my moving averages, I want my high time frame to be rising, then that means when this happens, I want to start like taking long trades. But I have to watch. If I'm taking this trade here, take a look at the high time frame MACD. If it's rising into resistance, I simply have to look back here for resistance and get out at that level. If I'm rising with my current time frame, right, and it's away from support, then I can trade a little bit longer and watch for divergences. Now, I want to tell you guys very quickly about the myth the myth that you've been lied to about divergences with the MACD, with the MACD. Okay, I've studied this for quite a long time, and I couldn't fully understand why it just was not working out. All right, I'm going to show you this thing real quick. Okay, let me shut off the high time frame. We'll shut it off here. I'm only looking at the MACD for the low time frame. And we have seen these videos before. Trade MACD divergences, bullish and bearish, but hidden bullish and hidden bearish. I'm telling you right now, bullshit. It's total lies, okay? You can't, so the MACD is averages, all right? The MACD is giving you averages, okay? It's just like looking at your moving averages. So how does your price action have a high and low, right? How does your price action have a low and a higher low with a high in between, okay? And then if you look at that point for your low, you don't have one, right? And down here, this is the point of a low on price, like it's right there. But there's no low on the MACD. You got a higher low here, right? And you got, so this is what I'm getting at. Where's the high here? The high is here. You get the high. That's all you get. So you cannot use divergences with the MACD, not against price. You cannot get, right? You cannot get divergences on the MACD with price because the MACD is averages and price is real time. So where are the divergences? Well, the divergences would actually be what's happening between your MACD and the histogram, or what's happening with the MACD current time frame and high time frame. The easiest way to see it would be what's happening with your high and low time frame. Let's put the MACD back on, right? Now, you just want to know, are they moving with each other or against each other? That's it. That's all you need to know, right? So as an example, you see that this is rising here, but it's falling here. Okay, you have a convergence of the low time frame and high time frame. So if the high time frame is rising, but the low time frame is falling, you do not trade along yet. You don't do it yet because it's a convergence. You want them to diverge away from each other, right? Not diverge away from each other. You want to be going in the same direction as each other. So let's say that they are diverging away from each other, right? Let's say they're diverging away from each other. That means one is doing one thing, one's doing the other thing, right? Here you go, right? So the high time frame is rising, but your low time frame is falling. Do you take the long trade? No. Because this is where you get a divergence on price. You'll have a divergence here. That's where it's going to end up. And the high of your MACD, the MACD highs are underneath zero. They're the top of the histogram. Here's one over here, right? They're the top of the histogram. Your highs are on the bottom, okay? This might be a hard concept to understand, but the highs are on the bottom and the lows are on the tops. Like that's a low. Okay, and you have a low here. That's a low. So when the MACD rises, it goes up, makes a low, and then makes another high right there. So these are not highs, but this is a low. Okay, so let me wipe all this out. A MACD low is here. That's the low. Where's the MACD high? There. That's it. That's literally it. So those are the highs and lows you would be looking for to compare them to something else. But they can be few and far in between. This is why you don't do divergences between MACD and price. If I change, right? If I change the length that I'm using, I don't know, 12 and what is it, 26, right? If I change that, now my highs and lows are changed, but the highs and lows are still the same on price. Some people use other settings for the MACD, right? Sometimes they double this. They want a 24, right? They want a 24, 4052, right? Because they want to try and get an alternate time frame, okay? It would take you too long to notice the divergence. Your histogram is getting lower, right? See how it's getting lower? The MACD, current time frame, is rising. What does this mean? That means every time the MACD makes a high, it's getting closer to the signal. That's why this is getting lower. The histogram is how close it is to the MACD, how close the signal and MACD are, right? So it would take you too long to notice that this is a divergence. You would fail. It would fail. So do not use this. The divergences I want you to use look like this. Here's a convergence because this one's going up, this is going down. This is a divergence, right? This one's going down, this one's going up. Wait until they're both going the same way. Okay, that's when you get into your trades. So you can see here, current time frame is rising and this one is rising. But do you take your long trades? No, because your moving average is in the way. Wait until they start going the same way. All right, see that? Now this one's falling. Now this one's falling. Take your short trade here. You're safer here, right? So let's talk about the settings real quick. Okay, settings are very easy. Let me put the settings back to where I like to put it. What was I doing? I like a 1428. Okay, I like the 1428. I am using it on a 5-minute chart. So I set this for 5 minutes. And I want to compare the MACD on a 15-minute chart. So I set this for 15 minutes. Okay, now you can use an EMA if you want to, but it only works on the current low time frame MACD. It will not change your high time frame MACD to an EMA. It won't do it. There's limitations to the calculation of EMA. Won't work. So I'm using a 1428. Why? Because I like using a 14. I always keep my RSI on my chart, and I'm using it with the zero lag multi-time frame moving average. And for that, my length is 14. So if you're using two indicators on your chart and you're commonly working with certain lengths of time of candles, then your indicators and your strategy have to match each other. So if I'm using a 14 period, look back on my moving averages, then I should be using a 14 period here. All I'm doing for the signal is just multiplying by 2. I can use a 1428, but I won't go higher than 28, right? So here I'm using a 5-minute chart for one moving average, 15-minute chart for another moving average, and a 45-minute chart. It's just each one times 3. That's it. That gives me, 3 more time frames up. Now, 5, 15, 45. If you'll notice here, you only get 2. You don't need 3, right? I'm using the 5 and the 15, right? And again, the 14 and the 28 over here. And the signal is it's just going to adjust like how strict, like how much noise you want in your, it just makes it more volatile. Okay, that's just it. Makes it a lot more sensitive. So that's basically how I'm using this one, all right? And again, really nice move right here. Let's see what this looks like right here. I want to show you this, okay? So you can see at this point, you are inside of your moving averages, inside the moving averages, right? And you can see that the high time frame is falling, low time frame is falling, and at this point, look at the histogram, it starts to expand. So you could take that short trade. However, let's say you move up into your moving averages, this is shrinking, right? So you're losing what? You're losing the downtrend, but you can't trade long because you're inside your moving averages. Grip, no problem. You break out of your moving average, right? But what happens at that point? The uptrend is shrinking. So this is a really good method to know that your momentum has ended, right? So if the uptrend is shrinking, wait for a pullback and see what happens. Get back inside your moving averages. You're shrinking, right? And everything is curving down. High time frame is already falling. If the high time frame is already falling, wait for your low time frame to catch up and do the same thing. So this is falling. You're shrinking on your uptrend. You're moving through your moving averages. You finally break below them, right? You get below your moving averages. So you're looking to break down short. And if that's the case, then look, you have a downtrend and expansion. So you have momentum to the downside. Take your short. You went through all of this choppiness and you were able to wait it out until you got a confirmation that says go short, and you went short. Nice big short, right? Okay, good. There you go. So that's the play on how to use this. It's a very unformatted video. It's fine. I just wanted to kind of send this out to you guys. Hope you enjoy it. Again, it's the zero lag multi-time frame MACD. We'll get the name up there. Here we go. The zero lag multi-time frame MACD right there. So any questions you got, go ahead down to the comments below, ask whatever you need to. Again, there's like 6,000 of you, 7,000 of you people that are already hitting this thing up. Let's see where we are now. There it is again. I keep getting notifications for this. We are now at 7,075 people. Really cool, guys. Thanks a lot for that. really appreciate it. So I'll see you guys next time at the coffee shop. I have some other things to do for you. And like I said, now that I've cracked the code at multi-time frame analysis and multi-time frame plots on charts, I'm going to be coming up with a lot of indicators that are going to give you multi-time frame information. And I think I released one which I didn't do a video for. So let's just kind of take a look through here. Here's the MACD and the multi-time frame moving average, right? And the, nope, that's not it. Is something missing here? Yeah, I came up with the multi-time frame money flow index. So you guys can also get that too. Okay. All right, peeps. Enjoy it. See you next time at the coffee shop. Peace out.